Good morning, everybody. I'd like to begin by acknowledging that we're hosting this webinar from the lands of the Gadigal people of the Eora Nation, and I also acknowledge the traditional custodians of the various lands on which we're meeting today, and acknowledge the Aboriginal and Torres Strait Islander people who are participating in this meeting. As Katrina mentioned, we're also hosting this webinar today in place of the original face-to-face event that we did have planned for today, which has been rescheduled for the 8th of March 2022. So that's a good opportunity for me to acknowledge all of our good friends in Melbourne and Victoria and express our very best wishes that you'll be out and about just as soon as you're able to do so. So we saw the RBA release its most recent payments data in its payment data series recently, and that reports on the growth of transaction volumes across the various clearing streams in Australia. And we continue to see strong growth in NPP volumes. We're seeing average daily transactions of about 2.7 million transactions a day, with an average daily value of about $3 billion. And the transaction volumes that we saw in August 2021 of about 84 million transactions were a 60% increase on the same month 12 months ago. So we are seeing strong growth. As many of you know and will have heard us say before, the NPP is designed as a low value clearing stream, but it is also carrying very high value transactions. And the largest single transaction that we've seen across the NPP was for just under $20 billion, which was a payment involving a government agency. Participation and use of the NPP continues to increase, and we'll talk a little bit later through this session about the various different access models and the different ways in which people can access the NPP. There are over 105 organisations connected to the NPP in a formal sense. 90% of those are connecting indirectly as identified institutions. So they include financial institutions, customer-owned banks, regional banks, as well as payment service providers, including a growing number of fintechs. In terms of account reach, we have seen account reach continue to grow, and there are over 76 million accounts that can make or receive NPP payments today, and that number does continue to grow, although in practice, most domestic retail bank accounts have now been connected with one or two exceptions, and that includes retail accounts, so individual accounts, but increasingly business and corporate accounts. Since the NPP went live about 3.5 years ago, we've seen a gradual ongoing migration of transactions from the direct entry system principally to the NPP. And in most cases, most single pay anyone retail payments are now being sent across the NPP, and that represents about 30% of direct entry credit volumes, with that number continuing to grow. We do know, however, that about 1 in 3 NPP transactions either involves a payment which is either made from a business or to a business, and we are continuing to see strong growth in business use of the NPP, both through the use of PayID as a receivable solution, or as banks and payment service providers and other organisations make available APIs to take payments, in many cases directly from core systems, process them in real time. And we will see as we make available new capability, which we'll talk about through this webinar and later on in the panel session that Katrina's hosting, but also as a different range of organisations continue to connect to the NPP, we will see the use of the NPP for business and corporate transactions continuing to increase. And so, as the title for today's session implies, which is about being more than speed, obviously the principal benefit that most people talk about when they think about the NPP is the speed of transactions. That's obviously only one of a number of different features and functionality that are made available. a second is that it's always available, unlike the direct entry system, which doesn't work on the weekends or public holidays. The NPP is available 24/7, and that enables payments such as the payments that increasingly Services Australia have been making to people for COVID support payments. Principally, those payments have been made on the weekend, on a Saturday or Sunday. So that's a really clear example of the availability providing additional benefits that haven't been available to date. But other benefits include the fact that information about the fate of a payment is available to the sender in real time, including where payments are not able to be sent. They might be able to be sent via a different channel. And the benefits in terms of back office processing through reduced manual handling of payments that are made in error, exception processing delivers customer experience benefits on both the payer side and the recipient side. And as you can see here, we initially the NPP was being used for relatively simple retail payments, pay anyone payments, but we do see the use of the NPP continue to grow for different use cases, whether that's paying workers at the end of a shift, workers who are working in the gig economy, making insurance claim payouts, as well as funding accounts that are used for outbound cross-border payments, as well as things like share trading. And we will continue to see the NPP being used in different ways for different use cases, particularly as capability such as Pay2 becomes available later on in the middle of next year. Although the NPP today is currently in the main processing payments that have been submitted individually, the NPP is also capable of processing payments which are sent in or exported by an existing system in a bulk payment file. And we will continue to see organisations processing bulk files across the NPP, although they'll be carried across the central infrastructure in an individual message-by-message form. Those payments can be submitted in a range of formats. They could be picked, they could be delivered to a bank or a payment service provider as they're built today in a bulk direct entry type file with a relatively low data payload rather. They're submitted to that organisation as a bulk file, and then the NPP participant will debulk them by converting them into individual payments, which are then processed across the NPP. Other organisations may choose to submit payments in a continuous stream via an API, including batch payment APIs where a payment is linked. And although the NPP can carry payments with a relatively small amount of unstructured data, or a message to the recipient, the NPP is also capable of supporting messages that are formatted in ISO form. And that's one of the first capabilities that we made available in our roadmap, was structured data message sets for use cases such as electronic invoicing. One of the other features of the NPP is the PayID addressing database, and the key benefit of PayID is that payments are able to be sent to an address that is simpler to remember, and also generally involve fewer mistakes, because the payers can check that they're paying the right person or business before the payment is completed. And we continue to see strong growth in registration of PayIDs. And so there's a 60% increase year on year in the number of PayIDs that are registered, but we also see strong growth in the number of payments that are sent to a PayID, and that's about 13% of all payments are addressed to a PayID today, and that number's increased by about 26% over the last 6 months. So about 11 million payments in August were sent to a PayID as opposed to a BSB and account number, and we do expect to see that continue to grow. we've done some research recently, talking to people who use PayID regularly, and it gives us some insight into the benefits that customers see and how they use it. What we do know is that PayID is highly valued by the customers that use it, and of those people who've registered for a PayID, at least half say they use it weekly, and people see it as a secure and fast way, obviously, to send and receive money. What we also know from the research is that most people find out about PayID when somebody shows it to them or when somebody demonstrates it to them, which is a key insight into how customers find out about PayID and get comfortable with its usage. Generally, but particularly in the recent pivot that a number of small businesses have had to do with COVID arrangements, we've seen a growing number of businesses using PayID to accept payments from their customers, and they're doing that in different ways. So we've heard from a number of small businesses, particularly those that had to kind of pivot quite quickly when they had to close their face-to-face operations, that they've been just using an existing PayID or an email or a mobile number as a quick and easy way for people to send them payments for things like kind of yoga classes or small market-based stalls. But we are also seeing a number of larger organisations using PayID as a receivable solution to accept payments from their customers. And this can happen in a number of different ways. Either a customer can be allocated a unique PayID, which is given to them and used as an address to send payments to fund an account, or there are organisations that are supporting the creation of dynamically created single-use PayIDs for a single payment. And recently we saw Xero launch an application plugin that enables those dynamic PayIDs to be set out on an invoice that's generated by Xero and used to match that payment and reconcile that payment in real time. So lots of use of PayID. We're seeing that use grow, both in terms of the number of PayIDs that are created, but also in terms of the number of quite distinctive use cases for which PayID is being put. We commenced a couple of years ago publishing a roadmap which sets out the key areas of focus that the NPP ecosystem is focused on delivering, as well as providing an update on transaction usage and various statistics. And we're shortly going to publish our fourth roadmap in October 2021, which will set out more information about the progress we've made, as well as some of the things that we're planning for the next 12 months. But you can see here the things that are on our current roadmap. So as I mentioned earlier, we did deliver data-rich message standards for use for things like electronic invoicing, payroll, tax and superannuation payments, and they were implemented in April this year. We're going to talk very shortly about Pay2, which will support third-party payment initiation, and you'll start to see Pay2 made available from the middle of next year. And then the next key item on our roadmap is to support international payments via the NPP. We are seeing the NPP used for outbound international payments today. So where a customer funds an outbound international payment, but when the International Payments Business Service becomes available, currently scheduled for April 2023, we expect to see the NPP used for inbound international payments, and this principally supports the receipt and carriage of richer information about the payer, which can support the AML and counter-terrorism financing obligations of all the various intermediaries in the payments value chain. So our roadmap is the key way that we provide focus on the key capability that we'll make available across the NPP ecosystem. The one that we're spending the most time talking about and certainly working on at the moment is third-party payment initiation. And This service has been in discussion and development for some time now, and we're really excited that we're on track for that to continue to commence being made available from the middle of 2022. And the Pay2 service, which was previously known as the mandated payment service, will enable customers to pre-authorise real-time payments directly from their bank account. So as I was saying, the Pay2, the mandated payment service, will support third-party payment initiation across the NPP. It's been designed to support a broad range of use cases. It builds on the existing capabilities in terms of message flows, and it has a rules and liability model that supports third-party payment initiation for account-to-account payments. And there are a number of features and uses of Pay2 which we'll talk about now, and Katrina in her panel shortly will expand on those in more detail. One of the key things that Pay2 has been designed to support, and Pay2 has been designed over a number of years by a range of participating organisations to really pay attention to some of the pain points that exist and to set the NPP up for a broad range of use cases. But one of the key pain points that Pay2 will support in resolving is to give customers greater visibility and control over the payment arrangements that are linked to their bank account. So a customer will receive a Pay2 agreement in a channel, most likely a mobile channel or through internet banking. They'll authorise that payment arrangement. They may come back to that and maybe pause or cancel that payment arrangement at some later point in time, and that will take effect immediately. But they'll also have visibility of all of the different payment arrangements that they've agreed to and which are current on their account, and they'll be able to access those in the one place. Importantly, payers will also have access to that mandate information, and they'll use that for a range of purposes, which we'll touch on in a second. So that will be obviously the key benefit that's delivered for payers, but Pay2 will also deliver a number of other benefits for users of the service, and you can see some of those here. So that will include real-time validation that a customer's account exists, and they'll receive confirmation of that when the Pay2 agreement is created. At the time of initiating a payment, they'll get a real-time indication of funds availability, as well as notification in real time about whether that payment was successful or not. If a customer does elect to pause or to change, to amend or to cancel a Pay2 arrangement, the third-party payment initiator will receive notification of that. They'll be able to access centralised secure storage of all the Pay2 agreements that they're a party to for use at a later point, for example, in resolving disputes. And Pay2 agreements contain more information and more data, which will support better reconciliation for all parties. And customers will make available Pay2 arrangements in a range of different formats. So that could be by APIs or in a different file format. As we've said, we spent some time talking about the different use cases that Pay2 would support, and we're really excited to see when the service is made available the different ways in which it will be used. But it will really bring the bank account back into focus as the place from which payments can be made and controlled. And it'll give customers more choice about how they fund transactions, and that could be recurring payments or in-app payments or online payments, whether they're one-off or recurring. So we will expect to see the Pay2 service used in a range of different ways in the years to come when it's been made available. One of the things that we spent some time focused on when we were designing Pay2 initially was as an alternative for direct debit payments, and Pay2 will deliver a number of benefits for end users in terms of greater payment certainty and improved cash flow, reduce the cost and complexity of exception processing, the ability to access the central store of Pay2 arrangements will give customers more confidence that a Pay2 arrangement has been authorised, and to get recourse to that information in the event of an issue arising at a later stage. And the richer information that's contained within the Pay2 arrangement will support better reconciliation. So over time, we do expect to see existing or new direct debit arrangements migrate to Pay2, which will provide those benefits to both sides of the payment. As well as direct debit arrangements, Pay2 will also support in-app or e-commerce payments. So I could link, my food delivery app or my streaming service or my transport app to my bank account directly. I can manage those arrangements and cancel them and suspend them just as I can. It will deliver benefits in terms of faster funds availability and all of the things that I talked about earlier in terms of clearer information about the fate of a payment and whether a payment has been processed. And it will support digital wallets as well as buy now, pay later solutions. So again, Pay2 has been designed to support a broad range of use cases, and we do expect it to be to be used in lots of different ways. It can also be used together with QR codes, either to create a Pay2 agreement using a QR code, or maybe once I've linked a digital wallet to my bank account, then I can make payments within that digital wallet using a QR code, either at a grocery store or using a more broadly available digital wallet solution. So we've talked a little bit about how Pay2 can be supported by billers or creditors. So payments that are initiated from my account by a biller, but Pay2 has also been designed to support accounts payable solutions. So I might want to authorise a third party, such as a cloud accounting software provider or a payroll provider, to establish a Pay2 arrangement, again digitally, which would allow that cloud solution or that payroll service to initiate payments and pay away those payments from my account directly from my bank account, and again making use of the richer information that's available to support reconciliation and matching of payments. So Pay2 will support payments that are initiated by creditors as well as payments that are initiated on my behalf from my account. There's been a lot of discussion in Australia about electronic invoicing in recent years. The Australian government has been working with the New Zealand government to expand the use of e-invoicing in Australia, principally by adopting the PEPOL electronic invoicing standard, and we've seen various governments, including the federal government as well as a number of state governments, talk about introducing incentives to drive the use of electronic invoicing and to deliver benefits for small businesses and large businesses. So we do expect to see growth in electronic invoicing in Australia in the next few years. And the NPP, in terms of rich data standards, but also the Pay2 service, will support electronic invoicing arrangements. Those invoice attributes, the PEPOL message can be mapped to the NPP payment message. A purchaser can pre-authorise payments that might come from a particular supplier using the Pay2 arrangement, and those e-invoices can be automatically submitted within the preset parameters that have been established in the Pay2 arrangement and paid away automatically with the payer's control. So again, we're seeing different building blocks of the NPP in terms of the data-rich standards, the digitisation, as well as the use of the pay-to agreement being used in combination in different ways to support enhanced business processes. I talked at the beginning about the different ways in which organisations can access the NPP, and there are this diagram sets out those different ways. As I mentioned at the beginning, there are about 105 organisations that are connected to the NPP either directly as an NPP participant or indirectly as an identified institution. And about 90% of organisations are connected as an identified institution, and importantly, an ADI status is not required to become an identified institution. So we have seen obviously a number of financial institutions, but increasingly a number of fintechs and payment service providers have become an identified institution and connected indirectly to the NPP. On the far left and the far right-hand side of the slide, you can see users and customers of the NPP. So these aren't formally connected to the NPP, but they access the NPP via either an NPP participant or an identified institution. These could be corporate customers, but also large payment service providers such as PayPal access the NPP as a customer of a corporate bank. And so there are obviously a large number of those, and we expect to see those numbers increasing. When Pay2 goes live and commences to go live from the middle of next year, we do expect to see a number of connected institutions connect to the NPP to submit payment initiation requests. Now, this is a direct connection model, and so these organisations, and not everybody will choose to do this. Some of them will continue to connect indirectly, but some organisations, depending on their business case and the number of volume, the volume of transactions they want to submit, may elect to become a connected institution, get a piece of kit from NPPA and submit payment initiation requests directly to the infrastructure, and they're cleared and settled by NPP participants and identified institutions as they are today. Again, connected institutions don't need to be an ADI to apply, and we have sought to align the criteria to become a connected institution with the criteria that have been set by the ACCC for CDR accreditation. And we expect to see a small number of connected institutions join the NPP over the next little while. A key feature of the Pay2 third-party payment initiation, which distinguishes it from other jurisdictions, is that third parties who want to initiate payments only need to make one access point and one access connection to the NPP infrastructure. And they can either do that directly, as I said, as a directly connected institution, or indirectly through a sponsor, but they can reach all of the accounts that are currently reachable by the NPP via that one connection. And that number is obviously currently 76 million. And that distinguishes the way that organisations access the CDR. So currently as a data recipient, there's a point-to-point model. So organisations that become accredited for CDR either need to establish multiple integration points with a range of different data holders or use an intermediary. And so when we obviously the place that third-party payment initiation was first seen was in Europe and in the UK, and the comparison between the Australian model of third-party payment initiation, which will be available via the NPP's Pay2 service, and UK open banking payment initiation is seen on this slide here. And there are a number of things that are similar about the model. So the requirement for the customer's consent in advance, but there are a number of things that are different about the model. So in the UK, non-banks can connect to undertake payment initiation, but they need to be accredited as a payment initiation service provider. And as I said earlier, they also need to have multiple connection points to each bank or to use an intermediary to act as a gateway. In contrast, in Australia, organisations can connect indirectly without any accreditation, and we expect to see a number of organisations do that as a user or a customer of the Pay2 service. But they could also choose to connect directly, perhaps as a connected institution, and they can reach all of the reachable accounts via one connection point. So there are a number of similarities and a number of differences between the different ways that third-party payment initiation is being rolled out, and I expect that you'll hear a lot more about those in the next session. Finally, in terms of alignment with CDR Payment Initiation, we'll hear more from the panel about this shortly, we do expect that Pay2 will be one way, but certainly by no means the only way in which financial institutions could meet their potential obligations to support payment initiation under CDR. And you'll hear more from the panel later on this topic, but I think a key message from Scott Farrell's report from late last year was that where possible, organisations should be able to reuse existing capability, such as Pay2, in order to meet their future regulatory obligations under CDR. And so I look forward to hearing more about that in the next session. Finally, I just wanted to touch on something that lots of us in the payment industry have been working on over the last year or so, and that's the formation of Australian Payments Plus. And so the amalgamation of the BPay Group, FPOS and NPP Australia into a single domestic payments entity is anticipated to deliver a number of benefits for consumers and businesses in Australia. We anticipate that the better coordination and alignment between the three companies and their shareholders will enable faster progress in the delivery of new capability than is currently available today. We anticipate that over time, the three organisations will be able to work together in ways that they haven't done previously to build the best payment solution for end users through combining different attributes of the different payment streams. We anticipate that it will deliver a streamlined access arrangements in the future, possibly through things like common API assets, but also through a streamlined engagement model. The governance structure for Australian Payments Plus will be more inclusive and more balanced, with a broader range of input from a wider range of perspectives, both at the board table, but also through advisory groups that will be established to support the board's thinking and to get input from end users of the payment system. And finally, a core part of the proposition of Australian Payments Plus is it'll continue to focus on delivering low-cost payments for retailers and businesses, which is a key piece of feedback that we heard through the discussions around the formation of Australian Payments Plus. So lots of people are involved in bringing this idea to life, and we're looking forward to the creation of Australian Payments Plus early in the new year and working with many of you through that new organisation.
A new payment service is set to modernise the way Australian businesses and consumers use bank accounts for payments. It's being developed by the Australian financial services industry using the world-class real-time payment capabilities of the new payments platform. Introducing Pay2, a new digital way to pre-authorise payments, whether one-off or recurring directly from a bank account. Pay2 keeps people and business moving. For payer customers, it means having more control over payments that come directly from their bank account. Pay to a phone bill, flights, or music subscription, and then see and manage these within the security of your existing online or mobile banking. Here, Pay2 agreements can be viewed, moved, or stopped from one place, making life that little bit easier to manage. For businesses, Pay2 removes the uncertainty of making and receiving payments from bank accounts. It's a smarter, more reliable way to support payments, offering real-time account validation and notifications at various stages of a payment. Whether you're a merchant receiving payments for goods and services, a business that outsources payroll, or a fintech that relies on money moving quickly, Pay2's accuracy and instant payments means your business can run that little bit smoother. Pay2 is set to offer the payments industry a platform for future innovation. To find out more, visit pay2.com.au.